Good morning, everyone. Welcome to our Monday morning trading room. Start of another work week. One moment here. I will get the screen share happening for you. All right. So it appears as though the market has opened with a little bit of a gap to the upside. We take a little bit of a review here. We'll take a look at the Eagle. You can see where Friday's session left off. And the overnight here from this morning's open, we've got a rather substantial gap just below the market here. It's difficult to say at this point whether that's what is usually referred to as an expansion gap, in which case we can expect the market to plot higher, or if it's a gap that's an exhaustion gap, in which case the market will probably try to fill it. But it's early, so we'll give them a couple of minutes here to get their bearings. Try not to do anything silly right out of the open. For those of you new in the trading room, welcome. Please don't be shy about asking questions. That's why I'm here. If there's something you don't understand or you need clarification or would just like to see a different market, just let me know. The markets that I'm featuring here are the NASDAQ, and a very quick overview. I've got my Hawk Scalper here on the top left, Falcon Swing Trader top right, Eagle Trend Trader bottom left, and of course the Raptor here on the bottom right. Okay, no solid signal yet. The Raptor did produce a number 2 soft edge sell signal right on the open, or a few seconds after the open. And now we're coming back with a hard edge bounce. What time is it? Ooh, we're only about 3 or 4 minutes into the session. Both are valid signals. It's just a touch early for me. To take the number 2 signal is probably the easier of the 2 signals because I can cover the trade above the high, right? I know where to pull the pin on the trade. The number 3 signal, I pretty much need to cover down here somewhere, I think, in order to try to make this signal work. But so far, we're just kind of moving sideways here. The Hawk shows it fairly well. We've got a lot of yellow bars clustering more or less the same price level. The Raptor also producing those yellow bars. And here now on the Eagle, we just produced our first in-sync signal. That does tend to be a strong signal for the Eagle, that first signal that prints where everything is in sync. In this case, it was a buy signal. The Eagle also showing, kind of, there's that sideways range that we find ourselves in. Euro dollar fell off through the overnight. Relatively quiet now, and I'm also watching crude oil, which I don't know what's wrong with crude oil lately. It is just a snooze fest. Nothing going on in crude. Okay, we're leaning a little bit toward the buy side now. Our number 3 signal would have paid off. We would have reached our high probability target off that number 3 signal. Yeah, I don't know. Chris asks, is crude oil traumatized by the huge drop last Wednesday? Quite possibly. Crude is a funny market. It's definitely dominated by professional traders. And so you always want to keep an eye on what the pros are doing. Okay, strong rally up here. I think the Eagle may have even found its profit target. That was a pretty strong run up. I was late on the Eagle signal. I didn't intend to take the Eagle signal, as it has a very good probability of working out. That's that first in sync Eagle signal. I suppose we could transfer this strategy to the Raptor as well for you Raptor traders. You don't need to feel left out. The number 2 signal, of course, would have been the counter trend signal, the number 3 signal, in sync with the band. Well, very strong follow through on that. Ooh, still pressing. Good morning, Aspen. Yeah, Aspen says, just joining in. I missed that Raptor 3 signal. So did I. I was kind of going through the charts, and by the time I saw it, it was already a little bit long, but a very good follow through. I was just commenting on how, how we have our first in sync Eagle signal, in this case right here. I may start to transfer that over to the Raptor as well as your other tools. You can look at that first in sync signal as a possibly high probability signal. And yes, I did have a nice Father's Day. Thank you for asking. I hope you did as well. Yeah, the one day of the year where what I have to say actually matters. All right, so I don't know here. We're going to get we're probably going to try to produce a soft edge sell signal here. I'm a little reluctant to short because this rather substantial run higher. We'll have to see how the signal unfolds. Right now, it does seem to be more of a buyer's market. So we do have a macro pullback signal here in the hawk. If you wanted to try to get in here for a little bit of a scalp, it's going to start running away on me here in a moment. The problem I have with this signal is where am I going to cover it? And since I need to cover it so close, perhaps the better course of action will be to take a second push on the signal. The second push simply means I allow the signal to print and then wait for it to react, and then place my entry above the high of that signal bar. But as you can see, it moved just a little bit too fast on me. No problem though. Ooh, okay, so we are going to get a soft edge sell. I'm going to go into manual mode, and I'm just going to look to trade a single contract here. As I said before, this is counter trend. The market does seem very strong to the upside here at the moment. Okay, and we have the advantage now of a second push on the entry, where the signal has printed and moved away from it. And here they come again. I have a feeling they're going to try to bring us in on this move here. I'm not super comfortable shorting, but we'll see. Sometimes those are the trades that work out the best, you know, the ones that you feel least confident about. All right, here we go. And it is at my least favorite time to trade as well. At quarter to the hour, the market tends to do some pretty funky things sometimes. We'll see if we get enough follow through on this one to find the profit target. Like I said, the only good thing about a counter trend trade is that you know without a shadow of a doubt where you need to cover this position, namely right above the high here. We're holding on, but see, we had a big block of selling go through. Not a lot of move to the downside yet, though, so that makes me think that a lot of that selling pressure was absorbed by the buyers. Well, here they go again. Going to try to make that push lower. Our target for the soft edge sell is the hard edge of the trading band. Good morning, Vic. I see Vic made it into the room. Way to go. Paul's asking, how is your target set? Okay, as I just pointed out, the hard edge is typically our target for the counter trend signal. And with a counter trend signal, you need to remember there's two things you need to have. First, you need to have a trend, right? You can't have a counter trend if you don't have a trend first. And then you have to have your test of the extreme. In this case, the extreme being the high and the failure. So it looks like the market is starting to, or trying to, unwind lower. The target, Paul, is just my high probability target. For the Raptor, the high probability target is $100 per contract. The NASDAQ trades at $5 a tick, so I have a 20 tick target. But if you wanted to extend the target, if the market continues lower from here, the hard edge is where we would anticipate the market to fall to. All the tools have their high probability targets. For the Hawk Scalper, it's $50 per contract. The Falcon Swing Trader and the Raptor both at $100 per contract, and then the Eagle Trend Trader at $200 per contract. You could also do what traders refer to as measured moves. And if you're going to do a measured move, it's going to look something like this. So you kind of measure from, the bounce where the market bounced on the high and bounced on the low, and then you extend that target. So that, don't be surprised if we see some traders taking profit here as well, around the 57.39 area, because there will be traders forecasting where the market is likely to go. And then, of course, another popular method is to use Fibonacci retracements, and the 50% level being the most popular, and you can see that one falling at 57.41, with the 62% level at 57.38. So, a lot of these things start to overlap. Your fib levels, your measured moves, your high probability targets. Tony says, because of the range we're trading in, I went with an OCO order on the Hawk. We'll see what happens. All right, good luck to you, Tony. The thing about doing breakouts, so take a look here at what Tony may have attempted. So Tony identifies the sideways trading range as so and uses the OCO order, that stands for one cancels other, to bracket this range to sell on a move lower or buy on a move higher. Here's the problem with trading breakouts is that they don't always break out. You'll get yourself stuck into a one-tick trend or a two-tick trend where the market breaks out for a couple of ticks and then retraces back inside the trading range. The safest way to trade a trading range is to actually allow the market out and then let it prove to you that it can stay out somewhere after this breakout phase. The market will retest and then it will come back with a new with trend signal. So you can see we're getting very, very sideways. Just came back with another hard edge buy signal. And with a little bit of luck, we will see the market drift a little lower. Now this hard edge buy signal here is a valid signal. The problem I have with the signals like this when the market has moved so far already is where do I cover the position? I know to get in here, but I want to structure a high probability trade. That means I can't put my stop right there, right below the signal bar. Because even though a lot of times the Raptor and the DTS tools will give you a signal and there will be immediate momentum, there's going to be times like we're experiencing right now where the market flounders a little bit. It's jumping back and forth and it makes it a little bit more difficult to trade. If I have my stop really, really tight, I may get stopped out prematurely before the market even has a chance to get to its profit objective. So with this number 3 signal, well, where am I going to cover the trade? Well, a lot of you will say, well, I'll just cover it right below here. Yeah, okay, it's better, but it's still kind of within the same range, isn't it? Now, if you're trading just a single contract, you will reduce your risk exposure considerably by placing your stop here, even though the probabilities are probably still around 40-60, 40 that it works out, 60 that it doesn't. If, however, you can afford to place a trade way down here, perhaps below this swing low or even below the resistance line, or even below the hard edge of the cloud, that's going to improve your probabilities considerably because now all of a sudden you have a lot of staying power. So even if the market does reverse from here and retreats all the way to the cloud, which is what we expect it to do, you still give it enough room that it can rally up and maybe get to your profit target. What a lot of people forget about stop losses is that it's not a loss unless it gets hit. Andres is asking, Eric, how do you identify when the test of the high is over and the second signal is forming? Well, of course, we're going to get the warning dots, right? We're going to get the warning dots. We're going to get the audio alert prompting us that a soft edge sell signal might be forming. But typically what I look for, here we'll look at this one because it's a little bit more textbook, but we have the trend. As soon as I see the test of the extreme, in this case, the extreme, again, the high. As soon as I see the market retreating from there, I open up myself to the possibility of a counter trend signal. We've had a rally, the market pulled back, it tried to rally again, and now it's failing to rally. That's what happens when the market makes a counter trend move. And that's kind of where we're at right now, although some will look at this and will say, well, you know, the buyers may just be getting ready to rally again, and that may well be true also. That's the thing about counter trend signals as well, is they tend to be lower risk because we can cover the trade reasonably tight, but they are also lower probability because they are counter trend. So you got to give up something for that lower risk, and what you're giving up is you're giving up probability. It's more probable that the market will try to rally, although they did try to push up here, and so far not a lot of participation to the upside. So I don't know, we might see this fall and at least get to our profit objective, which would be my intention. While I think of it, just a reminder that at the end of June, we're going to be taking a break for a week from the trading room. Of course, the first week of July is the Independence holiday in the US, and it falls right in the middle of the week this year. It's also Canada Day, but the Independence Day holiday is really going to kill the markets that week, so we're just going to take that time off. Wow. Okay, the buyers keep pushing, and we keep holding on near the highs here. First week of July, Aspen, is the one that we're going to take off. Because July 4th falling in the middle of the week, nobody's going to be working that week anyhow. Andre says, thank you, Eric. I thought there were more formal parameters like the number of bars or fractals or previous low broken forming lower highs and so on. No, all you need is for a counter trend signal, you need to have a trend preceding it, and you need to see that resumption of the trend fail, and then you will get the number 2 signal. Now, the programming itself does incorporate a variable that it needs to produce the failure in a timely manner, or the number 2 signal will not print. For instance, if the bars failed here and started heading lower again, I don't think we would get a number 2 signal, just because this test of the extreme here is so drawn out. Right? This is really, really drawn out from the high. All right, so a little bit early on that counter trend signal. The buyer's not giving it up today at all. All right then. Actually, I should have known better after that strong rally. I shouldn't have been so cute about trying to short it. Oh well. Kind of on hold here now for a little bit. I don't know if it's ironic or not, but the next counter trend signal is probably the one that's going to work, because we've seen the market make a rather substantial move to the upside now. And that's a big move for the NASDAQ. You can see here on the day ranger, 227 ticks above the 30-day average already, closing in on the 5 and 10-day averages. So we've almost seen our average range on the day. That's very tempting, Tony. Tony says, come to Canvas on your vacation. Cheap gas and good barbecue. Well, what more could a person ask for? Steve says, I got a new coffee maker for Father's Day. I know I'm all hyped up. Do your best not to get into any silly trades, though. Hey, way to go, Tony. Tony says his OCO trade paid off, so obviously Tony took it to the long side. I would have been a little bit more comfortable with a long position. I should have just stuck with my gut, but Andres, I wouldn't go that far. Andres wrote here, okay, so the second retest doesn't count. No, no, that's not the case. There was a very good chance the market would try to head lower from here. And how do I know that? Well, look at how long the market spent trying to go lower after it produced the signal. Like, it went lower, it was stuck in this range for, let's see, where did it start? 38. Well, a long time, at least 15, 20 minutes. It was stuck going sideways here. So there's always a good chance that the market will head lower. Even on this first signal, you know, when the Raptor produces one of the high probability signals, it is a signal worth considering. But as I mentioned, counter trend signals are always going to be riskier, especially when there is a defined trend. Which is why when I do take a counter trend signal, I almost always reduce my risk to just a single contract. And of course, I know where to cover the position as well. Okay, we'll see if we get another counter trend signal here now. Not that I'm bent on shorting the market, it's just that it does seem like it's going to be the more probable signal now. Oh, thanks, Ryman. Yeah, David asked the other day about what session I did the Profit Finder overview on. So David, and those of you who are interested in the Profit Finder, which is the back testing tool, I did that, Ryman says, we did that session on June the 2nd. So if you want to look back in the Indicator Warehouse archives on the YouTube channel, you can see how the Profit Finder works. The Profit Finder, of course, the back testing tool, where you can optimize your trading strategies. Okay, so I'm going to focus here on the Raptor. We are going to get comparable signals on the Falcon, and the Hawk may actually have to drift a little bit lower before we produce a sell signal. But what I'm looking at here now is a market obviously in trend. We have a teeny tiny test of the extreme right here. I haven't produced my sell signal yet, but this does qualify as a test of the extreme if I come back now with a short signal. I'm going to get my stops ready. Oh, nicely done, Aspen. Aspen says I took a small profit in riding the other. It's showing 370 so far. Well done. Yeah, I was a little slow on the switch, but not the first move I've missed, and it certainly will not be the last. Come on. So the Falcon turning over, the Hawk drifting fairly deep, but not into a red bar buy situation yet. Okay, so this kind of goes to Andre's earlier question about anticipating a number two signal. Well, we've got the trend, right? That's pretty obvious. We do have a tiny test of the extreme, but it's more likely, since I haven't produced a signal yet, it's more likely that I'm going to see another push up here. So for any bar that rallies from here on out, I'm going to really be looking for an opportunity to sell once I produce that counter trend signal. All right, so this now also a test of the extreme, albeit so far a small one. Ooh, Aspen knocking it out of the park on this last number three signal. He says I'm flat now. Took 190 and 295, so 485 on the trade. Well done. Oh, come on. There's the dot. This is going to be a very quick number two signal, I think. The way it produces, I mean, not necessarily on the follow through. Although I would appreciate a quick move down. Ooh, just the warning dot. No signal just yet. And you can see we're not getting our pre-signal warning as well because the market has not made a really big test of the extreme. Come on. Yeah, Tony says it's a morning of patience. Yes. It's always a waiting game. Aspen makes the comment, when I took that Raptor 3 signal, never expected that big of a move. It shows that the market does what the market wants to do. And that is also words of truth. Yeah, the market will do what the market will do. A lot of traders, especially starting out, almost have the notion of, bending the market to their will. You've probably seen them pleading and praying and just hoping in general that the market will move their direction. That's not your job as a trader. Your job as a trader is to take advantage of what the market is doing, not what you hope it will do or think it will do. Okay, we might get a bigger test of the extreme here yet. All right, so we are getting a proper test of the extreme. Tony says, any news from Moose Jaw? No. No, the grass needs cutting. The crops are growing. All right, well, they are slowing. There's no question about that. Yeah, Andre's asking, are the tomatoes already reddish? No, not yet. We've actually had a very cool start to the summer here on the West Coast, but I've really found that the weather follows the calendar very closely here. All right, we're going to get that soft edge sell signal here in a moment. All right, so I just popped in the signal there. So we've had the rally. We've had a couple tiny tests of the extreme. We may get a bigger test of the extreme. So you do need to be careful. But hopefully we will see the market head a little bit lower from here. So what time is it now? Oh, 7:25 already. Let's see if I can make a couple dollars back that I gave up on that earlier trade. Yes, here on the West Coast, the weather, as I mentioned, follows the calendar almost to the day. I first noticed it really in the fall because coming from Alberta, fall starts in September. Well, I know fall starts everywhere in September, but by early September, everything is already brown in Alberta. But here on the West Coast, everything's nice and green and the sun is shining until September 21st, first day of fall, and it's like somebody throws a switch and all of a sudden all the leaves change color. And same will be true. The weather will be nice until around December 21st, first day of winter. And then about a week after that, we'll get a dusting of snow and the weather will get cold. And it will remain, kind of coolish until March 21st. And then all of a sudden, the leaves start budding and the flowers all come out. And of course, June 21st, first day of summer, middle of this week, and our temperatures still, and weather in general, still very spring-like. So we'll see if the weather turns nice on Wednesday. It'll be a nice treat. Everybody's starting to get a little grouchy. Yeah, yeah. Aspen says here in Edmonton, we have two seasons, constant and severe winter. We always used to say 8 months of winter and 4 months of sweat. Yeah, Paul's in Central California. He says it's 100 degrees there. I heard the other day in Vegas they had heat warnings. I guess it was well into the hundreds, 45 centigrade, which is very, very hot. All right, here come the buyers on that push that tested the extreme now. The bigger test of the extreme that I was kind of anticipating. Steve says, I was long, got stopped out of break even. Now, of course, it's gone right up and hit my target. Yep, I feel for you, Steve. That happens. Yeah, Andres says here, there's a joke here about two Africans studying in Latvia. They described the weather conditions in Latvia and said, the green weather here is more or less okay, but the white weather is horrible. Yeah, for those of us here in the Great White North, we're certainly used to cooler weather. Come on. Turnover now. See, again with my counter trend signal here, it is a risky proposition because of the strong uptrend that we saw this morning. They did it to me again, stinkers. Excuse me, I need to mute the microphone here for a moment while I express my displeasure at the trade. All right. And here they come again. So that's twice now I've gotten a little bit anxious on a short. Okay, you could view this also as a counter trend signal, with this higher high being the test of the extreme. Normally, when we see a test of the extreme, it makes a lower high, but note that we only breached the high by a couple of ticks. All right, one more try. This now essentially also like a double top. Okay. Dug a little bit of a hole for myself here this morning. That's okay, we'll get it back. Okay, hit the break even, hit the first profit target. Oh, don't you tag me at break even now. Can't catch a break today. All right. So we'll see what happens now when they come up. Again, try to tag the underside of the trend line, which is also going to coincide with our resistance line. Whether that's going to try to send them lower. Let's see what's going on here with the other tools. We are getting a first micro macro cross to short here in the Hawk scalper. The Falcon working a possible trend change signal. The Eagle still bullish, but failing. We've got that test of the extreme there, that double top. So wow, everything's just dried up. Just waiting for the counter trend signal here to develop again. I'm sorry if I seem like I'm bent on shorting the market today. It isn't intentional. I've kind of backed myself into a corner now. Jake asks a good question here. Eric, any videos on trading goals for the day, profit and loss management, etc.? While we're waiting for this, I'll attempt to answer that question for you. I tend to have a trading quota on the day. Now, occasionally here in the trading room, you'll see me violate that quota. And that's because the trading room is not just a trade room, but it's also a training room. I'm trying to get you familiar with your tools, help you identify, what makes this a number 3 signal, why a number 2 signal, number 1 signal, and so on and so forth. As far as trading goals go, I usually have the objective of $1,000 a day. That's my profit objective, and I usually try to do that with 3 or 4 trades. And it's not as difficult as you might think when you limit the number of times that you're trading in a day. My best trading days have always been days where I've restricted the number of trades that I've taken. My worst trading days have almost without exception been the ones where I've traded too often. What happens when you trade too often is you end up chasing a lot of signals. You start taking signals that aren't worth taking rather than just holding out for the really good looking ones. If you're just starting out, I usually recommend that you trade once or twice a day. That takes a lot of pressure off. And if you miss a move, then so what? You miss a move. There's always going to be another one coming up somewhere. As far as profit targets go, I usually go with the high probability profit objective. Although if I take a signal early, I will look for early momentum, and sometimes I will try to run out the early signal. But almost without exception, you will do better going all in, all out on target. As far as losses go, I'm glad that you mentioned that as well. I normally have, everybody has kind of a pain threshold where they say, okay, I've lost enough, and if you don't have a pain threshold, you need to get one. And it's different for everybody. Some people, if they're down $300 on the day, that's it. They can't stand it. They stop trading. Other people, it's 3,000 on the day. As a rule of thumb, I have a 5% drawdown. So if I suck up a 5% loss, then I'll stop trading that day. And 5% is not really an arbitrary number. It's kind of a go-to risk management number. And 5% is usually a number I can recover from in a couple of days. So even if I get beat up on the day, I can usually make that back in a couple of days and just continue from there. It's easy to talk about trading discipline. It's very difficult to do. And I guess the better that you get at doing it, the more successful you will be as a trader. All right, here we go again with a counter trend signal. This is, again, we've got our test of the extreme. I'm not quite sure why we haven't printed a pre-signal here, but at any rate, I'm going to assume that the test of the extreme kind of fell outside of the programming parameters in that there were a few too many bars that printed here. But it is still a test of the extreme. It is still a counter trend signal. And we'll see if the sellers get a little bit more serious about moving the market lower this time. All right, boys and girls, we'll stay with this one for a little bit longer. Yeah, we'll see you later, Andres. You're very welcome, Andres says. Thank you for the answers. That's what I'm here for, folks. To answer your questions, to make your life easier if I can. Well, I'm having a heck of a time here this morning. Yeah, Jake says, here is my plan. I take 5 trades max, try to get $500 and a stop of $500, whichever comes first. Testing this plan now to see how it goes. It does get boring, however, and I only trade the morning session, which has helped my P&L. The boring part is good. If you're bored trading, you're doing things right. Trading, unfortunately, is supposed to be boring. Profitable trading tends to be boring. Paul asks, with a 20-day trade month, how many of those days do you make your quota? Well, if you're talking about my $1,000 quota, not that many. That's kind of my gold ring objective, right? But most days, if I stick to my 2 or 3 trading quota, it's not unusual for me to make anywhere from 300 to 500 on the day. If the market is responding well and I seem to have a good grip on what things are going on, I may place another trade, in which case I'll probably get closer to my $1,000 objective. But things do go sideways for me when I trade more often. And I guess in the trading room, see, I'm under a little bit of pressure in the trading room too, because if I sit here for an hour and don't take a trade, you guys are going to wonder, well, what am I doing here? Why is Eric sitting there for an hour not taking a trade? Right? So there's a little bit of pressure there for the entertainment value, if you will, which makes it easier when I have questions to answer, because that takes the pressure off, you know, chasing a potentially bad trade. See, I don't have an issue waiting all morning for the right setup. And we're kind of hitting the lunch hour skid now, so things moving a little bit slower. But I do believe at least a minor retracement is due back here to the hard edge. Don't know if we're going to see a full-blown reversal after the strong start to the day. The market may just kind of end up going a little bit more sideways overall. I think we're going to button up shop here, though. If you are trading this afternoon, do be careful, but I do believe that we have seen the top put in for the day. Again, that doesn't mean full-on reversal, but a little bit of a retracement, maybe back to 57.50. That would be a very solid retracement for this market. All right, gang, we'll get again tomorrow, and we will do this all over again. I will talk to you tomorrow morning. Bye for now.